Hello, everyone. Welcome. Namaste. Hi, Mike. How are you?
Hi, good morning. Good morning, everyone. Good to see everybody for this impromptu flashlight. So what do we have today, Nick?
Yeah, we are going to go over our film vertical and talk about verse and the ability for our community to start participating in verse starting as early as tomorrow. So excited about that. So this is a flashlight. So we're going to get right to the detail of it. This is Flashlight episode 5. We're going to talk about our film vertical a little bit and verse. Today is January 9th, 2025. This is, I believe, yeah, episode 5. So Mike, we've been last month, last year now, we talked a lot about our film vertical and how January we're going to sort of make progress on it. And
Hmm.
now it's January, and now we are making progress on it. So
Hmm.
I think the way we've approached it is there's a lot of work to do in terms of the branding, the public sale, etc. But we wanted to give our community sort of first dibs and participate in this innovative token. And so today, what we're going to do is talk a little bit about that. Do you have any thoughts to share before we go get into it?
Yeah. So just to give everyone context again, kind of our journey over the last, maybe 12 to 24 months is obviously we started off with the protocol, which is our arts and entertainment rebasing blockchain. And it's not enough just to launch a protocol because there is competition. You have to create volume. So we had the idea of launching concurrently with our art platform, which we, fondly named Exhibit. And in order to springboard, traction and to solve some of the problems in the Web 2, Web 3 space in terms of digital art and how to provide real utility for artists and sustainable income. So, with those verticals, then we added our gaming vertical, which of course we're going to be developing out next. And in the meantime, because of some contacts that we had a film production company that was interested in solving some of these problems. And they were ready to go. The gaming vertical takes a little bit to build out. Obviously, to develop a game, to develop that ecosystem, to do the programming on certain games does take time. But this one was actually ready to go. So all we really had to do was figure out the engine behind the film vertical, which we finally named Verse, which is we already did the groundwork, through our Vibe model, which works really, really well. And we thought we could do the same thing with the film vertical. So the context, we kind of dove head on into the film vertical, and we're pretty much ready to go. We have, I think, 4 or 5 films that are in production that we're going to be doing. I guess you would say an alpha test, through this model, and then we'll scale it from there. Obviously, we're building out the brand. It will be the fourth vertical for Vitruveo, and we're pleased to present. Uh, we figured out the mechanics of it. Now we've designed how the actual revenue is created and the tokenomics as well as the economics of the platform, and that's what we're launching today. And it's actually really exciting because where Nick and I have really been trying to work on not just generating another project, but generating projects that have real utility as well as solves a immediate need or problem within a specific industry. And I feel that this solution solves a lot of problems. We have done a lot of research with the production company that we're working with. We did a lot of fact finding in order to establish what are the core problems and what are our value propositions that we can come to market with the solution. And I'm actually really excited with how this is kind of being developed and seeing the problems that it does solve, which is really exciting. He had a chance to review the tokenomics. He actually helped us with the numbers in order to um, make sure that the calculations are accurate. And we're very, very pleased with the results. So Let's dive in.
All right, let's go. So let's start by taking a quick refresher on the basics of verse for especially for someone who is not familiar with it and joining us for the first time. So verse stands for Vitruveo Entertainment Revenue Sharing Engine, and it is for our solution for the movies and music businesses. So the basic premise is that verse is a project to bring long-term income to the entertainment industry. The problem it's solving fundamentally is that movie and music projects find it difficult to get funding, and creators do not have sustainable income. So this is a similar story to the art vertical, where creators really struggle to make long-term sustainable income. And so our solution is twofold. First, we help projects get initial funding. So clearly, Verse is about getting projects off the ground, especially deserving projects that have all the creative talent, but don't necessarily have the wherewithal to get funding. But what's more important is that Verse introduces, using Web3 technology, an innovative way to give stakeholders of every project, especially the creators, a share of revenue from every other project. This is what makes Vibe, our other solution, the Vitruveo income building engine, very attractive and very successful. And Verse takes that same model where you don't succeed simply from your project, you succeed from other projects also. You derive income from that. So that is the crux of the Verse solution. For movie makers, Verse presents an alternate, very streamlined funding model built on fairness, trust, and long-term income. Many movie makers have the scripts, etc., and have the screenplay, but they have trouble getting funding. And when they do get funding, sometimes they have to accept onerous terms that are really not very favorable to them. And what we want to do is create a model that is fair, and really encourages creativity and innovation in the movie realm, and always focused on long-term income. For investors, what we do is we enable investment in the entertainment industry through a very innovative Web3 funding model, which is designed to reduce risk and increase your long-term income potential, essentially perpetual income stream, not just from investing in a token and then selling the token, but holding the token and deriving income from it from the long term. So that's the significant upside for investors. So let's look at the workflow. It's a very simple process, which we can break down into five main steps. So the first step is the project inception. So this is where a movie maker, a producer, a director, they get together and they come up with a project plan. They come up with an idea for a movie. The next step is that we will provide the tools and the web landing pages, etc., for the project to do some friends and family fundraising. Now, this is not a new thing in Film 3, but it has failed where movie projects try to raise the entirety of their funding using, a Web3 model. Uh, where Verse is different is we don't expect the movie project or the team to raise all the capital. What we need is for them to raise a minimum amount of capital to prove the viability of the project. Basically, it's a litmus test. If you are unable to raise a little bit of capital from friends and family, then we question the viability of your project. But if you're able to reach that threshold, then the next step is you get into Verse funding. So what we want to do there is we want to have a team of industry experts who vet these projects. And more importantly, we are going to develop statistical and AI models that also evaluate the project, because we can look at past projects that have a similar DNA, and based upon that, predict the outcome in a much more reliable and much more predictable way than traditional movie investors like studios or distributors do. So we feel that we will have a superior model of evaluating projects to increase our success threshold. So if a project passes that litmus test, then they get into the project funding essentially, and what we do is we give them funding in tranches. So what happens is the project gets an initial tranche of capital, and then they begin their production. And as they achieve each milestone, more of the funds are released. So it's designed to mitigate the risk for us, and also to ensure that all the projects do what they're supposed to do on the schedule they're supposed to do. Now we recognize that movie making business is schedules go crazy all the time. We understand that, and we'll create a model that's flexible. But we want to make sure that there's accountability every step of the way. It's not just here, take some money and make a movie. It's really we are partners. We want to make sure that the movie is as successful as possible. And once it's completed, then we will create the mechanisms where we can convert the ability to capture the profits, which comes from a variety of sources, and convert them through our basically entity that we're going to establish into a Web3 tokenized model. So we need to take funds that are essentially fiat, that are coming in from profit sharing, etc., and make them available to Verse, which is all in crypto. So that's the bridge, essentially. I hate to call it a bridge because it's an overloaded term, but let's call it sort of an exchange. Even that is an overloaded term. So it's hard to find a term that's not used so much. But what we want to do is provide a mechanism for the profit sharing that is in fiat to come in, and for it to be converted into the crypto model that we are expecting with Verse. So that's a simple look at the workflow. Now, what happens there is, once the profits come in, they are split essentially three ways. So 70% of it goes into rev share for all Verse token holders. 20% goes to operations in order to continue to do this, to fund the development of the AI tools, to fund the teams that will vet this, to fund the website development, etc. We have to have capital, and that's what some of the profits are rolled back into. And most importantly, we have an overarching token, which is Vibe, the Vitruveo income building engine. So we will funnel profit sharing there also. So 10% of the profits go to Vibe. So if you're a Vibe holder, we've made this commitment, and we're going to keep this commitment. Any project we do is always going to have some profit sharing make its way back to Vibe. So Verse here presents an opportunity for you as a community member, if you're already holding Vibe, to also participate directly in one of these verticals. But it is your choice. If you choose, you can only stay with Vibe, and that's perfectly okay, because a portion of these profits are going to make their way there also. So that's basically how the profit sharing will be split. Now let's move on and talk about the funding phases here. So basically what we're going to do is a community activation first. So this is the community's opportunity to stake Vitru and swap Vitro to acquire Verse units. Now you've probably seen portions of this presentation before. Today we've revised a few things, and after working through the tokenomics and the economics and the business model, etc. So please make sure that you're looking at the most recent version, which is today here. So the community activation has two modes for you to acquire. It's a stake Vitru and swap Vitro, right? The next thing we'll do after that is go into a small period of a private sale, where we will have qualified investors who can acquire Verse units at a discounted price from the public sale price. And finally, later this month or early next month, we will go into a public launchpad where anyone can acquire Verse units. So this is public fundraising for the project, and also to kick off the initial first 5 to 6 projects that we are envisioning. Now, let's look at how our initial funding is going to occur. So there are two steps, as I said, the community activation. So that's where we are going to make 5 million Verse tokens available with 5 million Vitru. So it's essentially a one-to-one swap. So the way we are envisioning this is we are introducing a new stake mechanism, which is a 3-year stake term with a 0% APR. You get, for one Vitru, you get one Verse unit. And the key thing is there, we need about a couple years before the revenue share starts going. So we're going to lock that for 2 years. But other than that, it's pretty simple. One Vitru, one verse unit. Also, keep in mind that it's a stake. So at the end of 3 years, you get your Vitru back. And during that time, you are also claiming your rebases. So this is a standard stake. Your stake is going to show up in your scope stake page, and you'll claim your rebases just like you will for every other a stake that you've done. For Vitro, it's a swap though. We don't yet have the Vitro staking model in place. So it will be 10 Vitro that you will swap for one verse. So the choice is yours. Vitro, both are available. The idea is here to make up to 5 million of the verse units available for the community. The next thing in the public sale is we're going to raise $12.5 million, and that is through 25 million for 25 million verse units. So that's at a price of 50 cents each. So you can see that already the Vitru is at a significantly discounted rate at probably a third of the public price. So the distinction here is when you participate right now, you are swapping your Vitru, and then you get it back after 3 years. And meanwhile, you collect rebases, and you're able to collect verse revenue share also starting the third year. First 2 years, it will be locked. So from the public funding, basically a majority of it is going to be used to fund the projects, and 20% of it will be used for the initial verse development and marketing. Now, there are two types of verse tokens, and your wallet can only contain one verse token. So if you want to have multiple of these verse tokens, you would have to have multiple wallets. Now, each token can have any number of units. So it's an NFT with a number of verse units in it, and your rev share is determined by how many units are held in that particular verse NFT token. So the two tokens are Eternal and Elastic. So Eternal is basically one that if you have that NFT, you claim revenue share from verse forever. It never goes out of style, and it never gets locked. It never gets burned. Nothing. It's forever, and you hold that. Or if you transfer it to someone else, they have a revenue share forever. The Elastic token is one that is going to be assigned to the project members who come in, and I'll explain that in just a moment. But the Elastic one requires you to burn 50% of the units whenever you claim revenue share. So it is different from Eternal. Eternal, you keep revenue share forever. With Elastic, let's say that you want to claim 20% revenue share, you have to burn 10% of your verse units in order to claim that. So that makes the verse token units deflationary, not just inflationary, because we will keep assigning them to projects and it will grow over time. But the Elastic tokens make it where it is also a deflationary. All right, so now let's look at the breakdown here. So as I mentioned, the first distribution here, or allocation rather, is to the community of 5 million verse units, and these will be Eternal. You can stake or swap. The next allocation here is essentially for the project, for the marketing and team, which is also Eternal. And the third allocation is for investors, which will be 25 million, as I said earlier, and that will be Eternal. Now that amounts to 50 million. So that's your base. That's always going to be there. And then from there, it's inflationary in that as projects come in, we will allocate verse units to them. But you don't get verse units just by having a project and getting funded. You get it when your project is completed and you have profits, and they come back into the verse pool. So when you pay back into the verse pool your initial principal and your profits, then there's a pro rata allocation of verse units that is made to your team. So that's how all the creators on the project, whether it's the director, it's the actors, it's the animators, the musicians, the script screenwriters, all of them are able to get verse tokens, but those are Elastic tokens. So about this pink line here in the middle of the screen is Eternal tokens, and below it is Elastic tokens. So our vision is that as more and more movies are made and later music projects are made, more and more creators are going to enter this pool, and the verse pool is going to grow, but it's also going to shrink because whenever they claim a revenue, they have to burn a portion of their holdings. But we also envision that most of the creators are going to be on multiple projects, right? You in your lifetime, as for example, a screenwriter, you might write many screenplays, and so you will have verse tokens from different projects, and so that will keep growing your share. But also, when you are ready to claim, you burn some. So that's the mechanism that's there, and we feel it's a very unique and innovative and very flexible mechanism that ensures that verse is not just inflationary but is also deflationary in some regard. All right, so that brings us to the verse projector. So this was released yesterday. It is now available on Scope, and we'll go take a look at it momentarily. It might be really sort of overwhelming for people who are not used to sort of financial analysis, etc. But we've tried to make it where the top half is very simple, and I'm going to demonstrate in just a moment. And the bottom half is for sort of the accounting wonks, if you will, those who care about the details. You can scroll down and see all the detail about how we have developed the financial model for it. But at its surface, it's pretty straightforward. There are basically 5 inputs and 4 sliders. So the way this model works is premised on the fact that movie projects are going to fail or succeed, but there's a degree of failure or success. So if you think about it, this is very much like the venture capital model, where venture capitalists fund a lot of startups. They expect that most of them will fail, but a few of them will break even, a few of them will have moderate success, but a couple of them are going to have runaway blockbuster type successes. And that's what this is predicated on. Look, no one can predict the future. No one can predict 100% the outcome of what a movie is going to be. There are some movies that people predict will be complete flops that turn out to be runaway successes, and movies that spend millions, even billions on production and end up being complete disasters, right? You don't know that. So what we have to do is we have to use our tools, our team that vets these projects, and the AI, which is a new innovation to predict success. But with this calculator, what you can do is you can use these sliders here on the right hand side, the project success allocators, to kind of make your own predictions about it and find out how that might happen. But the top inputs are, let's focus on those for a moment. The top inputs are how much Vitru you want to swap. That's a 1-to-1. So you put in whatever number you feel comfortable with. How much Vitro you want to swap. That's a 10-to-1. So you put in whatever number you want to feel comfortable with. The next item there is initial projects. So we want to start with an initial number of projects this year. So the number you put in there determines how much capital we need to raise, because the more projects there are, the more capital that needs to be raised, because we have to fund those projects somehow. The next bucket is how much the initial funding will be. There are movie projects that can be made for $250,000, and there are movie projects that can be made for $2.5 million, depending on the types of actors, etc., and their ask. So what we want to do is start with a reasonable number of 600K and increase it by 100K every year for the foreseeable future until we hit $1 million mark, where we can get into those kind of projects. So the amount of funding you're willing to provide for a movie determines the type of projects you can get. And so that's that 4th bucket. And the last bucket is how many community verse tokens we are going to allocate. So we put the default number of 5 million there. And then it's just a matter of playing with the numbers and determining what the outcome is. So I'll go and demo it, but Mike popped in here again. So Mike, I'll have you give your analysis of this, and then we'll go on.
Yeah, so whenever we were talking with the production company on designing the tokenomics for this and designing the business model, it was very important for us to get accurate numbers on the fail rates, break even, moderate, and the blockbuster. And we worked with them and took a historical look on their production on what these results were to make sure that our calculator is in line with industry expectations and industry standards and industry metrics. And that's kind of what we came up with. And everybody on that production side felt comfortable with all of these numbers. The thing that we can do, though, there is a certain level of control that we do have on this. We can take um, the production company said there's you're never going to have a problem funding movies, meaning there's always a huge pool of projects that are available for funding, but then your fail rate will be much higher. So if you curate and handpick certain projects, that maybe you only go with certain projects that have certain names behind them, certain production companies behind them, certain actors, whether it's a CB or A actor, you can control that fail rate, uh, more actively and keep that. They said, somewhere in the 25% fail rate is kind of standard. But I think Nick and I and the producer both kind of agreed that we can hand choose certain projects in the beginning, during the alpha stage, to control that number, so that we can get more in line with break even and moderate profits. Blockbusters are just blockbusters. You don't really have any control over that. A blockbuster could be, a lot of people think of a blockbuster as like a Warner Brothers film or something like that, and though that can be true, um, our blockbuster definition is not necessarily box office sales. It's the relationship between the cost of production to the sales. So, like if you look at Blair Witch Project, for instance, the cost to produce that film was $50,000, but I think it grossed, multi millions. That would be considered a blockbuster. So those are kind of the metrics that we used, and I felt um, great after that conversation, knowing that we have more control over the vetting process on which projects we onboard. So that's all I wanted to say on that, Nick.
Yeah, that's great. Okay, we're gonna go demo the projector here in a bit, but very good insights. The important thing to understand is, when we initially had said that we would be going into the arts domain, the gaming domain, and the movies domain, everyone universally expected us to come up with some blockchain solution for movie streaming or something like that. And folks, the fact of the matter is that's not necessary, and the technology is a lousy fit for it. The blockchain technology currently does not allow for very efficient storage of large amounts of data, and it would be foolish for us to pursue something in that regard. What we want to do with our solution for Verse is use Web3 at its best, take advantage of tokens, shared revenue, and things like that. So that was our goal also in coming up with this model, and we are very pleased with how it's turned out. All right, so if you look on Scope now at scope.vitruveo.xyz, there is a new option, Verse Projector. You can go in there, and the default values are the ones we are basically using for our model. You can change those around as you wish. As I was explaining, you can change these numbers to your amount that you have, and keep in mind that this here projects your verse income. And what you have to do is think about the fact that if you are holding an eternal verse token, then you can draw on this anytime you want. You can draw from the income anytime you want. I see from the comments that some people are questioning the 2-year versus 3-year. Let's differentiate and be very clear about this. When you are staking your Vitru, it is for 3 years. The revenue share is locked for the first 2 years. And as you can see, it's not substantial anyway for the first 2 years. That's where the 2 years comes from. It's not a mistake. It's very clear that everyone's revenue share for the first 2 years is locked, because we are focused on growing the business at that point, and we are not yet ready to scale up the revenue. So that's what that comes from. So, but if you look, starting year 3, that it starts to climb up. And as we entertain more projects, we can do that. Now, if you look at a typical sort of production entity in the movie business, they max out at a certain level of double digit projects. What we want to do is push the envelope because of our innovative model, and we feel that we can scale this up efficiently using both the tools we have, AI, and also it's a shared model, right? So we can expand, and at year 5 we kept this up at 100 projects in our default model, but it could go up very easily. Once we find success, we can scale that up very easily. Now let's first look at these sliders and uh, explain how this affects the project. So we start off with 15 projects because that's what this number here is. So if you change that number, you're going to change that. Now, if you increase this number, what's going to happen right away is you're going to require more capital. So this funding number is going to go up because we need more capital if you have more projects, right? So I'm going to leave that default number for right now. But look here how the distribution of these projects is: fail, break even, moderate, and blockbuster. So that's our 4 categories. We presume that the first two are not bringing us any income at all. These are projects that, despite our best efforts, have failed or just managed to break even. And our goal is to minimize those over time using our tools and AI, as I mentioned. The the revenue that is going to come into Verse is going to come from these secondary 2 categories: moderate and blockbuster. Now, the way these sliders work is you can increase or decrease any of these 3. You can't change the fail category. The fail category is automatic. If you decrease any of these, the fail will automatically increase to absorb whatever changes you have made. So now you see that we are decreasing the break even, and as a result, you're seeing more failed projects and fewer break even projects here, and you're seeing more projects in moderate. Now, as I do this, notice how there is no change in the income per unit. So this here, this green row represents your income for one single verse unit, right? So that's, you would have swapped one Vitru, or you would have swapped 10 or you would have you would have staked one Vitru, or you would have swapped 10 Vitro there. So the reason it doesn't change at all for break even is, as I said, we don't expect any revenue back from either of these categories. But if you start messing around with the moderate one, you'll see that immediately there's significant changes in the income per unit, because as that goes up, your income can go up, because what you're saying then is your failure rate is lower and your moderate success rate is higher. Uh, the the biggest impact comes from the last one, which is blockbuster. But blockbusters are very, very rare, and we put here, a 3% default threshold. You can increase that if you want to do what if comparisons and make that higher, and that significantly drives up the income. So our goal would be to maximize that and minimize to really, we'll focus on the moderate one because it's really hard to predict blockbusters, but uh, we can formulaically predict and optimize for moderate projects and to minimize fail. So if you're going to focus our energy, it's going to be on reducing fail and increasing moderate success, because that's where most of the success threshold is going to come from. As you can see, that clearly changes moves the needle. So if you wish, you can stop right there and do your analysis and figure it out. You don't need to go into all the details. As you can see here, there is a row called average capital. So as I mentioned during the presentation earlier, we're going to try and increase the amount of funding, the average amount of funding for movies till we get to like $1 million threshold in 2029. But this year we'll start at 600K. You can lower that threshold, which lowers the capital ask, but also have to remember that there's a certain breaking point. If you go below a breaking point, you're not going to find movie projects with talent that would drive its success, right? You're going to get off into an indie film that has a very low chance of high revenue or potential. So all of these decisions had to be made very carefully and very, very deliberately. But I won't go into a lot of detail on on the lower part here, but I'll just quickly skim over it for all of you sort of people who are more interested in analysis of this. The project success rate we already discussed about. The verse units here is the tokenomics section. Basically, it talks about the beginning units. So as I mentioned earlier, we have 20 million units for marketing. We're going to add the community units of 5 million. We're going to add public sale units. And this is an estimate of the project units. So the project units come from moderate and blockbuster, because we assume that break even and fail projects are not going to come back and bring back capital, so they don't participate in verse. But the moderate and blockbuster projects do, and so they get a token allocation of elastic tokens, not eternal tokens. So these three are eternal tokens. This one's elastic, and that gives you an ending tokenomics here. And as you can see, it's inflationary. This model, this projector, does not have any accounting for the burn for revenue share, because we expect that people won't do it right away. It'll be probably year 5, year 6 where that happens. So, and that'll be a negligible impact. But the growth is fairly slow. You can see that in 5 years, it's grown only 14 million tokens from the projects. That's where the growth is coming from. It's coming from no other source other than from the projects. So the more projects we have that are successful, the more tokens that will be issued, but which is good because they're bringing capital back in. This section here is an estimation of the market cap and funding. So we assume that the unit price of Verse will increase over time. Now, this is per unit, so this is not per token. So we assume that over time, just like for Vibe, people might want to actually sell their Verse NFT, etc. So this would help them determine what that price might be based upon the units associated with a particular Verse NFT. So if, for example, you're looking at year 2 here, and we estimate the unit price at $4, and your Verse NFT has 100, so that means that your Verse NFT is then worth $400. But it could be worth obviously much more because of the rev share component. Here we have the revenue prediction here. So this is based upon a multiplier. So what we do is we essentially say that, okay, if you're a moderate success, there's a certain multiplier that's been applied to it. And if you're a blockbuster, there's a much larger multiplier that's applied to the revenue that went in, which is essentially the production cost, and the return is predicated on that. Next, we have expenses here. So this is the capital. This is the funding that goes out to the movie projects. And then we have a portion, a fixed percentage actually, available for operations. We have to actually run this thing, right? You have to have the teams, you have to have the infrastructure, etc., to run it. So that's captured under this one row. And so the difference between the two gives you your income, which could be negative, which is a loss, or positive, which could be a profit. So I revised the numbers. So let me reload the page and show you what is by default. So by default, we have a small income growing steadily over time, and the next section here is the revenue share. This is where the Verse and the Vibe revenue share comes from. So ultimately, we want to get to a 70% profit share that goes into Verse, but we can't do that right away because we need to keep capital for operations. So it graduates into this. If you look at the numbers and reverse them, you'll see that it grows by 5% every year until it gets to 70% in 2029. So it starts at 55, I believe. Yeah, 55, 60, 65, 70, 50, 55, 60, 65, 70. That's how it grows over time. But it's locked. The rev share is locked for the first 2 years anyway. So these 2 years are not important. It starts off here and it gets to 70%. The Vibe is consistent, 10% all along. That's we basically treat that as an expense, and we put that in there. And then based upon that, you can look at the cash flow. How much are the funds coming in and how much are the funds going out? Now, in order for this model to work, there has to be some capital that comes in. And so for the first 2 years, we are raising capital. So this year it'll be 12.5 million, and next year it'll be 37.5 million. And after that, it becomes self-sustaining from the distribution of profits from the projects. So if we have the right mix of projects, we can be self-sustaining very quickly by year 3. So this is a typical this is a model for a sort of startup, if you will, but it's unique in that it's for the movie industry and it is designed to fund projects. So I hope you have some fun with this projector, and I hope it educates you, your decision on how much you should stake or swap. So let's get back into that. And based upon the calculator, you can see that by default, what we are saying is that a one Vitru, which is worth around 17 cents today, might be more, might be less, I'm not sure, but we are projecting a 12.6x income on that by year 2029. So if you want to kind of do some mental math on that, that's a good way to look at it. And finally, let's look at what we are talking about with the community activation. So we intend to proceed with the community activation tomorrow. That's January the 10th. We won't provide an exact time yet because we want to make sure everything is ready, but it's happening tomorrow. So there are two aspects to it. Vitru, you will be there. I know I will get a lot of questions about this, so I want to be very, very clear. What's on this slide is what's happening. Everything else is the answer is no. So you will be able to stake Vitru in the Scope application directly from your wallet. If it's in your wallet, you can stake it, okay, in Scope. The only other option you have is to stake Vitru in Studio directly from your vault. So if you are a creator and you have Vitru sitting in your vault, you can stake it directly from there. We have enhanced the claim dialog to allow you to stake directly from there. That's it. There is no other mechanism. There is no, and we will not be providing any other mechanism currently. So you can either stake what's in your wallet or what's in your vault. The ratio is 1 Vitru to 1 verse unit. Your stake is for 3 years at a 0% APR. Along the way, you can claim rebases because your stake is going to go into Scope just like all your other stakes, and there'll be a claim button there, whereas the rebases start coming in, you'll be able to claim. So that's Vitru. Remember, there's only two ways in which you can stake: directly from your wallet and directly from your vault. No other way. When it comes to Vitru, actually, there's an error on this slide. I apologize. It should say swap Vitru in Scope directly from wallet. I'll fix that. So you can swap 10 Vitru for 1 verse unit. So swap Vitru is transferred directly out of your wallet in exchange for verse token with units. So I'll make sure that slide is fixed. It should say swap Vitru. So that's it, folks. It's Vitru, and which is stakeable from two different sources: your wallet or your vault, and Vitru, which is swappable directly from your wallet. So that is it, I believe. Yes. So I'm gonna take this slide off for just 1 second, fix it, and bring it right back. Meanwhile, Mike, you can address any questions that are already up there.
Okay. Mammoth asks about the music industry, and Nick and I haven't gotten too deep into the music industry as part of this vertical. You know, I my personal opinion on this is it probably would make sense to have separate engines for the music industry because there are different metrics and there's different, it's a different industry. However, Nick, do you have any insight on that, on what your thought was?
Yeah, the music industry is highly competitive. If you look at the solutions that are out there, there's Apple, there's Spotify, etc. So we would be getting into a red ocean if we were to try and get into that business. We feel like the problem still continues to be the funding aspect of it, not the distribution aspect of it. And so we feel that this model will work for them. We might scale it, we might calibrate it differently once we get to it, and we keep open the possibility of a different token. But really, we want to economies of scale. Basically, we don't want to introduce too many things, too many different mechanisms, etc., because they all cost money. If we have one simple mechanism, that works for funding projects, I think it will do us well. So I think we might calibrate how Verse works, the success metrics, etc., for projects, which will be definitely radically different from music. But I believe the engine will work the same way. So I don't
Mhm.
think we want to introduce a new engine for that.
Yeah, it may be a fifth vertical, but at this point we have our hands full with film and obviously the exhibit. But as we scale and as we, secure the foundation for the other verticals, we'll then start diving into music and seeing, what sort of Web3 problems we can solve with music, and whether that's funding, whether that is some other solution, we can kind of dive into that. But we are taking all the different, I know Mammoth, you, Biz, a few others have been working on the music vertical, and we're going to take all of, the research that you guys have done, and once we get to that stage and see what sort of solutions we can solve. Our merchandising revenues, yeah, Nick, and we talked about this a little bit about merch, because obviously that's a huge pool. I don't think we have a merchandise um, portion built into this model. Did you talk with Jason about that, or?
Actually, we do, because the way we will stipulate our investment in these projects is require them to go through our clearinghouse, essentially the for the receipt of the funds. So it doesn't matter where the funds come from, whether it's through streaming, whether it's through movies, whether it's through merchandising. They all will flow in the same way, and our entity will be responsible for converting those um, fiat revenues into crypto. So it will be a requirement for any projects that we fund that they use that. There's a technical term for it. I forget. It begins with a C. It'll come to me, and I'll share it in Discord. But the type of entity that we are going to create for this is essentially going to be responsible for clearing all the revenues that come in, and that's how we can track the profits and the principal that is recovered for every project.
Mhm. After 3 years of Vitru staking, do we need to restake them again in order to keep the verse?
Nope, you're done. You have your verse forever.
Mhm. And we answered this question from Mystique. Yes, you can stake directly from your vault.
Yes,
Tate asks, is the entertainment revenue that goes to Vibe also locked for the first 2 years, or is it just for verse?
it's just for verse.
Yeah. Are the rebases claimable every time there's a rebase or after the 3-year stake?
Anytime you can claim any rebase anytime.
Yeah. Gus asks about competition. I know that we reviewed some of the solutions out there. What was your research on that,
Yeah.
Nick, if any?
So there, if you search Film 3, you'll see that there's quite a few entities out there. But one of the things that almost all of them universally have is they treat every movie project in a silo. I think that's the unique
Mhm.
differentiator we have, is we are creating a horizontal model that is community based and long-term income based, and that's what's different. So in terms of competition, face it, we are going to be competing with every studio and every distributor uh, out there that funds movies. So studio is really a more apt one, because some distributors fund some movies in exchange for rights to certain territories, etc. But really, studios is what we are competing with. So just think of us as a new Web3 studio. So our business model is predicated on using the economics of Web3, which are novel, and that's what differentiates us. It's also, we don't treat each in a typical studio, which is a corporate entity, a profit-making entity. The profits go to the studio. They accrue to the studio, the owners, the shareholders of the studio. The difference with Verse and our film vertical is that the profits accrue to the community and all the creators, which is very unique and very different. And so I would say that that uh, we are competing on the business model, on the fact that we are funding movies, but everything else we are apart. We are different and unique.
Yeah, that's a great point because a lot of the risks associated with investing in films is you're in a silo, you're in one project. And our approach is a little bit different that we want to take more of a VC approach where we're building pools of movies, and then given the fail, the moderate, the blockbuster, the break even, factoring that in, that overall there will be profit and through diversification. So we mitigate risk um, for our project through diversification. And we believe that that is a more viable approach rather than, doing a crowdsource funding for one project, let's say. Um, uh, that to me is the exciting part of this. And that way we can take each project, take it through some due diligence on what mitigate our own risk on that project, and then if it qualifies and passes that test, then it goes into the pool, and then we let the numbers take care of themselves. As projects are funded, as projects are produced, as projects are generating revenue, we'll have our own internal data on our fail rates and break evens, moderate and blockbuster, and then at that point we can shift accordingly. The actual model, we can curate more strictly and more diligently, or we can loosen up because maybe our fail rate is not as high as we thought it was because we're already being pretty picky on the projects that we take in. So it's going to be really interesting to see how the pool evolves and the metrics that we see, or our KPIs, and then that way we can adjust accordingly. But yeah, let's
Um,
see. Is Vitru still planned to be staked for the future? Token launches, I may want to hold some.
yes, we committed to introducing a Vitro staking program in January, and we're going to do that.
Okay, we talked about merchandise. How do we change a Vitru in our wallet to Vitru to swap to Verse, or do we swap Vitru in our wallet to Verse?
Neither.
We
I
can
don't
do.
think you want to do either of these things because they are both detrimental to you. If you have Vitro in your wallet, you stake it for Verse, and that's it. If you have Vitro in your wallet, you swap it, and that's it. You do not want to change Vitru to Vitro because then you would go from staking to swapping, and you would lose that. So why do that? If you stake, you keep your Vitru.
Mhm. And what happens to Vitro? Does it burn?
No, it
No,
returns to the treasury. Yeah.
yeah, it just goes to the treasury. Our supply is actually pretty low on Vitro. So one of the reasons why we're doing a swap instead of a stake is because the supply is so low. A lot of people have picked up the Vitro token because the price is so low at this point, and because it doesn't have any utility right now. Because we haven't, once we have our launch pad, fully developed, and there's going to be a lot more utility. And once we build out the decks, so it's up to you on whether or not you want to use Vitro or Vitru. But that's why we have a swap for Vitro is because of the supply issue that we have right now. So if movies take off sooner than later, would the 2 years lock be unlocked early?
I don't see why not. Yeah, I think that makes sense.
Yeah.
Our whole premise of this is to give back to the community. It's for long term income for everybody. So if we can unlock that sooner, then why not? Yes.
This question here, Nick, do you want to handle that one?
Is the new verse calculator
I
already
believe it. I believe it
generated?
is.
I'm trying to think of.
Didn't we have verse in the what if?
There is verse already there. So if you put that verse, I need to go back and see if there is an impact on this. I need to analyze that. Thank you for that question, and thank you for bringing that up. I will verify that, and we'll talk about it tomorrow. If there is any impact, or better, we'll make sure that it's it's fixed, because when this calculator was created, It was unclear how the verse model would shake out, so it was just kind of a placeholder. But we'll verify that and make sure it's done correctly.
Yeah. Uh, this question is interesting. How's the first appetite for institutional investors to fund these projects? We do have a specific launch plan for this. The good thing about Verse is it's a model that everybody understands. People understand the movie business, they love the movie business, and they do want to invest in the movie business. But the biggest problem they have is diversification. They don't want to be overly exposed in any one project. This solves a lot of that problem to spread out risk because in a way they're a part of an equity fund or let's say a mutual fund or an ETF or something like that. This is not an ETF. This is not a financial product. All those disclaimers, but the way they operate is to spread out risk and invest in a wide variety of movie projects is definitely appealing to those groups. Um, and I think the category or the way that we're going to do this is continue to work on our active supply in order to reduce sell pressure, for our list in January, so we can convert some of that active supply into verse. We can then build on doing a VC fund specifically for verse, and then we'll launch on Pink Sale, and then that will be a our ICO or fair launch.
Yeah, we
Yep,
said
we
yes.
already covered
Yeah.
that. Let's see. Nick and Mike, in the future, what about having another vertical for AI for creators and businesses such as AI agents, example, VABE, Vitruveo Artificial Income Intelligence Building Engine? AI was covered a lot in blockchain life in Dubai when we went. We really don't have our sights on AI just yet because we already have a lot on our plate. We may incorporate some form of AI into our model. We just don't know where that fits in at this point. We have to do some more research on that. Nick, do you have any input on that?
Yeah, as sort of the caretakers of the protocol, we are focused on these three verticals. We wanted to build a business around the protocol, which is not just the protocol itself, but it's really not up to us to keep scaling this out and building businesses. We want to encourage other people to do it, and for that, over time, what we will do is we will have funding, we will have grants, etc. And what we want those companies to do, anytime we give a grant to someone for a project, we will expect them to put rev share back into Vibe. So we will make everything centered around Vibe, which is our protocol level income. So I think instead of spreading ourselves thin and introducing new models, our focus is these three. That's it for now. And the protocol,
Yeah.
we've got it. That's very, very big. But we want everyone in the community. There's a lot of very creative people out there, very smart and intelligent people. We want to encourage you to build things, and we want to fund you. And our only constraint is give back to the community by sending rev share back to Vibe. That's it. So that's how we intend to scale up.
Yeah, again, how did we get here? It's because it seems like we're just launching one thing after another, and I think it's important to take a step back and understand our journey on how we got here. Obviously, we have uh, an innovative blockchain that is different. If we just went to market with the blockchain, we would trade relatively flat for a while until projects onboarded. And so our initial thought was to build a blockchain with one art vertical, and that way we can get some momentum, do something really innovative, solve some problems in order to build traction and on-chain volume. And then we ran into supply issues where our vesting started to expire. So we had to then deal with that problem. So then we also wanted to redefine the blockchain as an arts and entertainment gaming system or ecosystem. And we needed to do some fundraising efforts. So then we had Vortex and the gaming industry. The film industry, we weren't really uh, we it wasn't like one of our number one priorities 6 months ago. The only reason why it's a priority now is because of the contacts that we have that kind of landed on our plate through other seed investors, and who were film producers, and we were in talks with them. And so we thought, okay, 4 verticals, that is enough. Let's come to market, go to market with our MVPs, our minimum viable products for each of those verticals. Stop there, and then we'll scale those verticals as needed after the list. So much of what we're trying to do right now is to manage supply to reduce sell pressure. Again, the problem that we have is with the supply is the funding backing to that supply. That's a critical issue in our opinion. We need to drastically reduce supply as best we can without sacrificing the tokens. So we're repurposing those Vitru and Vitro tokens, tying them, converting them from trading to rev share, and while building out our verticals. And that's kind of the big picture view of what we're trying to do. So we're solving numerous problems with Vitruveo with these verticals. We're solving a supply issue. We're solving real world problems. We're doing hybrid Web 2, Web 3 innovative projects, which are really exciting. And at this point, we're gearing everything up to list. And we have to make sure that the tokenomics are in line with a successful list. And the more that we convert the supply over to rev share, the better. The good thing is these are really innovative products. And so I think as we scale after list, we're going to deepen and refine things, work on the UI UX, work on developing each of those verticals. We talked about scaling the team, assigning department heads for each of these verticals, and then we can scale development so that Nick is not doing the majority of the work, so that he can take more of a CEO role rather than a CTO role or a developer role. So just taking a step back, that's the big picture. And I think we're in good shape moving forward. Nick, do you have any?
I think that's it. We'll wrap up our flashlight here, and we'll leave some for tomorrow because you've got a spotlight here. We'll talk more about our strategy for raising capital here. And also tomorrow, we're going to talk a lot about print on demand, because that is coming very fast on Exhibit. We'll also talk about True Level, which we are getting ready to roll out here. So tomorrow's spotlight will be very exciting. We'll review some of these, and as mentioned here, we will activate this tomorrow. The time is to be determined, but let's say that we will strive to get this going by the time of spotlight. But don't hold me to that. We will launch tomorrow, but I don't know the exact time yet. But thanks everyone for attending this flashlight, and we'll see you tomorrow.
Okay. Thanks, guys.
Thanks. Bye.